The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, good afternoon, folks. 877-927-6648. And for those of you that are getting ready to take a trip to France, you'll be happy to know that the 6-month yield on the French T-bills has now turned negative. So they are willing to hold your money for you, but you're going to have to pay them. That's such a deal. I don't know. We'll have to wait and see. Anyway, if you're interested in the Treasury bond market like I am, I want to start out with the stock market, of course. I'll go into the Treasury bond market, but this is a spot to look at TBT. We're trading at around 1501, 1502. I don't think after it's more than about 20 or 30 cents from that level. We're making the 61% retracement in the Treasury bond, and also the Treasury notes are making the 786. So this is the spot if you want to take a look at it. I'll post a chart into Tiger TV in just a little bit. But first I wanted to talk a little bit about the lunar cycle that we've been watching in the stock market. We've had, that full moons and new moons have hit very nicely each time now over the last several cycles. It goes back a couple of months. That sets up a 61% retracement, as you can see, down around that 1326 level, in the S&P, which is about 16 points away from where it is, and where it is right now, however, and that's what we're trying to see if it's going to come down into that. Frankly, folks, I believe that we are entering the most important 3 weeks of the whole year. And the reason why I say that is we've been watching the Bradley model, and when it works, which is about 75% of the time, it works very well, and it has been doing incredibly well this year. It missed the bottom by just a little bit in the June area, and it said we would be rallying into the early part of late July, early August, and I still think that's going to happen. And we will have to wait and see if this is going to be the move that we've been waiting for. But I think patience is what to wait for here. The short-term swings are really nice because this morning the S&P broke down. It rallied exactly to a 61% retracement at the 1349 level, and then has sold off a little bit. And we're still looking for it to come down a little bit into the 1326 level. Now, when Basil was on, he talked about the three dollies, and we're going to talk about one of those right now, and that's the VIX index. It's also indicated that we were probably at a top in the market. We came down and hit the 786 level two times in the last couple of weeks, and it has held that level. And so we think we're going to get a little bit of a rally here in the volatility index, and it should get up to that 21 level. So this is the second one, and of course the third one will be the U.S. dollar index, which I will cover a little bit later. Now, the thing that I wanted to emphasize here is when I put up the chart on the lunar cycles that are there. I've done some. I'm writing a new book for Wiley. They've asked me to write a new book on astro cycles and the financial markets, and I'm doing a bunch of research on that, and it's really been quite enlightening to me. I use the patterns as my primary method of entering the market, but when I start to look at some of these things, when I do the research, it really amazes me that someone else hasn't. There's a few people, of course, but someone hasn't really looked at this very, very closely, because some of these cycles that when they hit, they're just nearly precision-like, and they're certainly useful. They don't work all the time, but they work far better than when they fail. So I'm talking in an area of about 70 to 75%. And if you get an edge like that in anything that you're doing, that's a tremendous advantage of what's going on. We might have to interrupt the program because my burglar alarm just went off in the house. I don't know what's happened. Well, I'm not going to worry about it. So until someone comes in the house, I guess. But I don't. I'm going to have to turn it off, folks. Give me 30 seconds. I'm back. I don't know what happened, but it went off. This is never had that happen before. Okay. We were talking about the VIX index and the fact that the volatility index has come down to the 786 and it's made a perfect ABCD bottom. And then we were talking about the lunar cycles that were there. Now I also want to talk about the Bradley model, because what we're looking at here on the longer term Bradley model is quite bearish through the rest of 2012 into 2013. And so this is the real important part that we're coming into is this next high that we have scheduled to come in near the end of July, and that's the one that I'm watching with great anticipation. So far we've rallied. We made a 61% retracement back in the Dow. We've also done the same thing in the NASDAQ and the Russell and the S&P 500. Now we're selling off. Now if this sell-off really accelerates and it starts to melt down, the whole scenario of what I'm looking at here, might not, work the way I want it. But right now, it's really holding up normal. I mean, we just went up. We made a high into the full moon. We've got a new moon coming in on the 19th. That's about I think it's a week from Thursday. So, we'll have a, pretty good idea of what's going to be happening in 7 more trading days. I imagine it'll be kind of choppy through here, and then we will, get an idea of where we're going to be. But I think that the real thing to focus on is what's going to be happening in a couple of weeks, and that's the main thing that we're trying to, really focus on right now. Now, the market that I was talking about when we first started the show was the TBT, and so far it's hit the exact 786 at 1501, and I believe if you take a look at that, we're going to cover that while we get into before we get into the break, because I know some of you actually do some of these things. Some of them work, some of them don't, but the risk is relatively good. But what we're looking for here is the fact that the TBT hit the exact 786 at that 1501 level. It's trading at 1504 right now, and so your risk here would be at the very most 20 cents. And of course, you could gap and go down farther than that. But that's what I would be looking at for today as something to keep an eye on. I frankly, when you see countries that are yielding less than par, in other words, if they're asking you to hold their money and pay you to do it, I mean, it's probably something that you ought to really reconsider, because that doesn't seem like a very good return on equity when you have to pay them money. And when you consider what inflation is, you're actually losing money. I think it'd be better to buy some gold and silver coins and burying them in the backyard, than pay negative interest rates. We all know what's happened to Japan when they did this, when the Japanese market, went negative. They've been in a recession for many, many years that they've never come out of. So that's not a good thing. Lower interest rates is really not a good thing. You need something more equitable, something more logical, but the Federal Reserve has decided that they want to keep interest rates low because they think that's what moves the economy. And frankly, I think it's more of the people that can actually come in and buy and sell things and use their money to stimulate the production of goods. In other words, to have jobs. And we're certainly having a hard time with that. Those are fundamental things that I don't really follow very much, but there's things that you want to keep in the back of your mind, because with interest rates as low as they are, they're not going to stay there forever. We've put the chart up here over the last couple hundred years in the Tiger TV, showing that interest rates have never stayed at a 0 level or 1% level, for a very long period of time. And we've been here historically for one of the longest periods of time that we've ever had. So I believe we're going to be looking at something, far greater than that, than when we come up to the same thing. It's a very interesting, situation here, because, we are rallying right up to the 61% retracement, in the Treasury bonds, and also in the Treasury notes are hitting the 786 retracement. And also the German bond has also went up to the 61% retracement. This is retracements back, from the recent high that we made, a month or so ago. So this is a real critical level here. We could easily, go busting through, to the downside. And in other words, interest rates could go, higher, and we could be wrong on this, but this is the place where, the risk is probably very small. We've been waiting for this level to come in for, a couple of days now, at least 4 or 5 days, and now we're reaching it. We've got a couple of minutes before the break. I wanted to take a moment to talk about the corn chart and the soybeans and the wheat. These markets are going ballistic to the upside, even though that there's rain forecast. The market is still going higher, and that tells us that we've really had some major damage to the crops. And so that's not a surprise because they've been going straight up. Dr. Ruth Miller, my teacher, sent me a picture of the corn crop, her corn and beans in Indiana, and believe me, her corn, the old adage is high as an elephant's eye on the 4th of July for corn, and believe me, corn is not even waist high. And it is really looking, I haven't seen a corn crop that bad in 40 years. So there's some real problems here. And this will affect us, down the road with, the prices of things that we have to buy, and that's including meat because, most of the corn and stuff is used for feed. And so you're going to be looking at higher prices for corn and for cattle, hogs, and also chicken. So these things will come down the road, and we'll wait and see if this is going to be the major effect. What I want to see is after the first rain occurs, is what's going to happen to the the crops. Will they bounce back like they have in the past? I remember in 1980, I think it was 88, we had a horrible crop, and yet we had some very good rains right about 3 or 4 weeks before harvest, and these crops came back really good. Remember, we have hybrid seeding situations now where the seed is much more hybrid than it was many years ago, so that could have an effect. But it's a weather market, and it is going straight up. And it's causing the DBA to move higher also, which we will see how high it will go. But this is one of the little things that you have to consider when you're trading. Remember, we were in this weather market before it took off, and I said it was time to book the profits. Unfortunately, that was a couple $1,000s ago, but it's still better than I just don't like to be in them when you come in some morning on a Monday and they don't trade for several days. That happened. It didn't happen to me. It happened to other people back in 1976, and I promised myself I'd try never to get into that situation again. Okay, we've got to take a little break here. We'll be back right after the break.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Stock market corrections are the number one reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage at TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
Okay, good afternoon, folks. What I'm going to do now is to put into Tiger TV a 220 or 210-year history of what's happened to interest rates over the history of our country, and it shows that we are at a level that we've never been there before. I mean, we are actually lower than we were during the time of the Great Depression. So this is my personal feeling, of course, is the fact that everybody thinks that it's a safe haven to go into T-bills and to Treasury bonds, but they're nothing more than paper. It's a promise to pay, and if the other countries in the world decide that our promise is not that good, then the proverbial stuff will hit the fan. But as of now, the whole world looks like it's a very safe place to be in these things. But whenever you see negative interest rates, folks, that should raise your raise the hair on your arms, because that tells you that there's something not right. So this is what we'll be following, really closely here, because when the turn comes, I believe it's going to be quite dramatic, and it will affect the whole world, because we are in a global economy now, and we're global trading, for heaven's sakes. I mean, when I first started trading, we didn't really follow the rest of the world, but now the whole world is, on either on an iPod or some of these other things that everybody uses, so we know what's happening all the time. So, and I frankly, I don't know if it makes any difference, who's going to be elected, because it's pretty much under Congress and and the Senate is whether we're going to turn this stuff around. But we do need some leadership, and we'll see what's going to happen with the election. But that's a coin toss, my folks. We got a call from Joseph in Seattle. Are you there, Joseph?
Yes, I am, Larry.
How are you today?
Really good, thank you. How are you?
I'm fine, thanks.
Great. Hey, first of all, I just want to thank you for always taking the time out to help traders who just getting into the game, or even experienced traders with all your decades of experience. I think it's just an incredible opportunity for everyone here. I had a question for you on Combust. I'm looking at your Astrocycles book, the old one that you wrote, and actually I'm kind of interested in. I'll probably get your new one whenever that comes out. But in that in the chapter there, you have the Combust, and you have got exits. You have an entry, an exact, and leaving. And I noticed we had a Combust date on June 1st, and it just happened to coincide with the bottom in the grain markets. I mean, they hit the bottom exactly on June 1st. And so I was wondering if that was an entry, an exact, or a leaving point.
Well, I'd have to go back and double check it, but frankly, what I look at on Combust is we measured it as it being exact is what we were looking for, and that means that it was pretty much in conjunction, with the sun, and that's what we were looking for. There were a lot of different timing things that you can use with Combust, because when you're dealing with the planet Mercury, because it's our nearest planet to the Earth. The moon is not a planet. It's nothing more than a satellite. But the Mercury is a planet, and it has an 88-day cycle to it. And so there's a lot of different cycles within that Mercury cycle. And that's some of the work that was done by George Baer during the 1930s. He was a friend of Jesse Livermore and W.D. Gann. He was a very... not reclusive, but he was a very private person. But he did write some books and had a very interesting life. I was fortunate enough to meet his daughter right before she passed away. She was almost in her 90s back in, I think it was 1991, up in Carmel, California, and she told us a story about her father. And she was still living on the trust fund that he had set up for from that time, and his whole thing was about the planet Mercury. That was the thing that he really focused on.
Yeah, George Baer. I think I remember reading something. I think he did. Did he write that little book called The Egg of Columbus?
Yes, that Egg of Columbus book. That was I don't know if you folks remember that this book. Back in the late '80s, this book was the book that everyone wanted, and it was for sale, for $25,000. And people would come to me and they said, "Let's put a consortium together and buy the book." And I said, "No, I'm not interested." And one day in the mail, some farmer from Ohio sent me the book. He'd had it there. He said, "I know you want this book." He said, "It doesn't mean anything to me," and he just sent it to me. And it's about 29 pages. And basically, what Baer was showing there was how to use pi, how to use the 3.1 number in using it with astrology, but had nothing to do with trading.
Yeah.
Okay, listen. Thanks for calling in, Joseph, and I appreciate the nice words.
Thank you.
Okay, my friend.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations, including precise stops and target profit zones, leaving nothing left to guessing. Log on to tfnn.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Okay, we're back, and we have a caller from, I believe, San Francisco, California. Are you there, Tim?
I'm here. Yeah. How you doing?
How are you?
It's cold here. I'm not kidding.
Well, I can believe that. One of my favorite quotes is from, actually, it's from Mark Twain. Yeah, the coldest day he ever spent, or it was the summer in San Francisco. The coldest day he'd ever spent was his summer in San Francisco. That's
59 or 60 where I am.
Shut the front door, boy. That's going to hurt the corn crop in San Francisco for sure.
Yeah, I got the heat on.
What can I do for you, my friend?
Well, I'm looking at UVXY. I'm in it at 950. And I know these ETN or ETFs, they're tricky and they're very volatile. I thought it was a good play, seeing that the market looks like it's headed down, but I'm just not sure about these things.
Could you help tell me what the UVXY is? I'm not even sure.
Oh, it's double of the volatility index. It's a short. So when volatility goes up, it's supposed to.
Okay, I understand. Well,
it's
you're
like
right.
A VXX.
Sure, it doesn't look anything like what the VIX index does. But if you take a look at the chart, and I'll put it into Tiger TV so that you if you take a look at it, we're very close to a 1.618 move down at that 8 level, and it's made a very, very, what I think is a bullish pattern. It's made a 135 expanding triangle. That's also known as a broadening bottom pattern. It is, in other words, wave 1, wave 2 exceeds wave 1, and then wave 3 exceeds wave 2, and wave 4 exceeds wave 3, and now we've made the 5th and final wave, I believe, down here. And we've also made it in a butterfly fashion. I would be, I'm not in this, and I certainly would not recommend you to add to a losing position, but this market has just made another butterfly pattern in a beautiful ABC format down here at this level where we hit the other day at around 8 something. So I would certainly give it a little bit more time here, because I think it's got a chance to has a chance to rally from here. Okay. That's what the pattern looks like. But you don't want it if it goes below 7.5. I would think that you'd have to take the bite the bullet at that spot. But right now, this is in a buy mode, in my opinion.
So I've got to stop at 750. I should just kind of leave it there.
Yeah, that's a good place. I would actually put it at 751 or 749. I don't like round numbers.
Okay.
So I've that's my experience with round numbers has not been too good through the years. So I always make them an odd number.
Okay. Great.
Okay. Yes. Thanks for calling in, Tim.
Thanks.
And if you get a chance, go to Tadich's Grill today for lunch. It's one of my favorite restaurants in the world.
Oh, I've been there many times.
Yes, I know. It's actually, if folks don't know this, it's the oldest single family-owned restaurant in the United States. I think the family has owned it for over 200 years, as I recall, but it's really a special place.
It's a very good restaurant.
Yes.
Thank you. Appreciate it.
That's for sure.
Okay.
You bet. And one other thing, if you're ever in Clearwater, you want to go to Platterotti's Italian Deli. That's my second favorite place on the East Coast. So that's another fun place to go to. But if you're ever in San Francisco, try to go to Tadich's Grill. It's in the middle of the financial district. You're going to have to wait, but it's really a fantastic place, to go for lunch or dinner. And it is really you'll always see somebody famous there. And that's the whole beauty of what we're trying to do here, is have a nice time and meet some fun people, and that's one of the beauties of being in this business, is you meet a lot of nice folks. Okay, we're going to talk about the U.S. dollar here, folks, because we are at a really critical level here in the dollar. We have we've broken up. We've broken out to the upside as far as going back and matching the high that we made just back in May. And what's interesting about this, though, is that we've made it in AB equals CD fashion. This is the third dolly that Basil looks at when he's looking at the market. He looks at the bonds, the VIX, and the dollar index. And the dollar index is at the moment of truth, folks. It needs to get above 84, to be a complete breakout. And if it does that, then my assumption on bonds is probably going to be wrong. But right now, the dollar index is at what we refer to as the moment of truth, because we have this double top that's here. The euro has had some support come in at that 122.50 level, which is relatively important. And this is where we stand as far as I can see it. Now, the weakness that we've had in the stock market, I still believe has been because of the fact that the market topped on the full moon, and the lunar cycle is working during this sequence. But remember, it goes away. It'll run for 3 sequences, and then it'll turn away, and that's when you'll have to be prepared. We'll try to watch that. I know Steve Rhodes watches it very, very closely, but right now it's following nicely. And of course, we have the next new moon is going to come in on the 19th, and we have a P-index date around that time, and it is also a Bradley date. So the 19th of July is going to be a pretty significant date, as is the end of July when we come into the final Bradley date, and that's the one that's going to, I believe, tell us what's going to happen over the next few months, and we will see what's going to lead us, to the promised land, if that's the case. If we do this, and it sets up the way we want, it's going to set up a tremendous, pattern for getting short the stock market if it does follow the way we think it is, and then we should have a pretty good correction. And if we are coming down strong from August, into the election, it's going to be very hard for the incumbent to be reelected, because much of the things that we deal with in the economy are forecasted into the election. So that would be the thing. This is one of the reasons why McCain lost so badly actually had the popularity of the vote. He just didn't have the electoral votes. But when Lehman Brothers went under and Bear Stearns had already been taken over for $4 a share, that basically took the credibility out of the Republican Party, and we had someone new come into the Oval Office. And we'll see how the market's going to react to all this. But right now, I'm actually, each day that I come in, I just see how the markets are forming to come into this date that we have into July, end of July, early August. Folks, this date is as important as the date that we had on March the 9th of 2009, when the market was making its final bottom, when the Dow was at the 61% retracement, that 1667 level, and 6667 level, and the S&P was at the ominous number of 666. So this is the date that we'll be watching. We'll have a lot of numbers coming together at that time, and this is the game plan that I'm looking at now. When we were referring to, we have to watch the flow of money, of course, because this is how these markets move, and we need to keep an eye on the euro, because it has much lower price targets, as we've mentioned many times. We believe that we're at least going down into this 118 level. We made a lower low this week, but frankly, it's been at a spot where you could get a really good rally, because you've been down so many weeks in a row. It really makes it really, really difficult to keep going down forever in these markets, even when the news is really very, very bad. So this is what we're trying to look at. But we are, if I can get there we go. I'm technically challenged today, and we'll take a look. But I posted into the Tiger TV the long-term weekly chart, on the euro. We've gone below the 786, of course, which was at that 125 level. And we're three weeks down into a move. We made a lower low than we did in May, but we really didn't go very far. We made a 1.27 expansion of that at the 122 and change level. So to have a rally here would not be unusual. But the longer term targets in the euro, if we can take out that 120 level, we could easily go down, to the par level. And remember that the euro has had an incredible move. It's gone from, it came out at 130 in 2000 and had a range of 85 to 160 during that time. Okay, we've got a call from Keith in Iowa. I hope you're indoors, partner.
I am, although it's nicer today.
Yes, I understand. Well, why is corn up 35 cents if it's nicer?
Well,
I think the damage has been done. Yeah, they've damaged it quite a bit from what the pictures that I've seen. It looks pretty bad. What can I do for you, Keith?
Larry, I wanted to talk to you a little bit about TBT.
Sure.
I didn't get to listen earlier, so I'm not sure if you discussed it or not. But
yes, I did. That was the first thing I discussed on the show, Keith, is that TPT was making a 786 retracement down here at this $15 per share level. That was equivalent to the S&P to the futures and the bonds going up to the 150.16 level, which is the 61% retracement, and the Treasury notes have gone to the 786 retracement. So my assumption was that if you were to buy TBT here, you don't have to risk more than 20 to 25 cents. So it's a very low-risk trade. Unfortunately, it could gap and you could lose more than that, but frankly, 20 to 25 cents is about all as I would risk on this particular trade in TBT. Okay,
great. I'll go back and listen to that as well. Can I ask you one more, Larry?
Absolutely.
I've been patiently waiting for the on the SPY to put in some shorts on the SPY.
Yes.
And maybe you discussed this too, but I didn't get to listen earlier. The we were down hard a couple of days. We're down again today. I was looking, kind of being patient to wait for that 786 retrace from the April high.
Yes.
And we had, I think it was the 29th, we had that huge
up move, the big up move. Yes.
Right. Now, what would you look at on that chart to determine whether it's going to actually get to the 786 or possibly be beyond right now? You know what I'm saying?
Well, one of the first, in fact, the first chart that I posted into Tiger TV today, Keith, was the hourly chart of the S&P, looking at the lunar cycle that was there, and it shows that within just a few hours of the full moons and new moons, we've either made major highs and bottoms. So we know that something is there cyclical, and we did this on the full moon of July 3rd. We topped as the market was trading overnight up at that 1374 level. That was the assumption that that would probably be a high, and now what I'm looking for is the market to come down into this 1326 level or lower, because we've got so much time between. It's got 7 trading days between now and the end of the next new moon, which is on the 19th. So I'm expecting this pullback to come down. Now, it's not going to be straight down. There's going to be choppiness along the way, but the next key date is that July 19th. That's the next key date that I'm looking at. But I think we've made a pretty good top in to the full moon of July the 3rd, and that's what I'm seeing right now.
Would you expect that high to hold through the fall, or is that a little?
That I don't like to try to make any predictions past a few days. But if we do take out that high, that just means we'll probably be going up into July 19th, and then I'll be looking at the one high that I really believe that we're not going to take out is that May high. If we take that May high out, that's going to change a lot of things in the cycles that I look at, because I think that was a really big high. That's when the S&P was up around that 15 level, and I think that's the high that's not going to be taken out, for quite some time. All I'm looking for now is the market to be bouncing around here, just choppy, but for the next 3 weeks, and that's then after that, we'll really have a good idea of where we're going to go. The evidence that I see now says we're going to go down, but as we get closer, we'll know more information.
Okay, thank you, Larry.
Thanks for calling in, Keith, and I hope it cools down for you guys and you get some rain, because I know it's pretty bad over there in Iowa.
It is. Thank you. Bye.
Okay. Thanks, folks. Okay, we're going to take a look now at crude oil, because, we've had a pretty good bottom form at the butterfly bottom down there at that 77 level. And, we had a nice rally, and now we're in the third day of a sell-off, and so what we want to be looking at here is to see how the market will come into the 61% retracement that comes in around the 81.50 level. Now, we're $4 away in crude oil, which is quite a bit, but we'll see if it'll actually move down into that level, and then we'll have a better idea of what's going to happen. So far we've only made a 382 retracement off of that, but it still has a long way to go. But we're really looking forward to that level at around 81.50 in the crude oil. That's the main thing that we're looking at, and we'll be able to put a trade on if we get to that point. At that point, you don't really care. Go. We got to take a break. 877-927-6648.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. at less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Just like that, another month has passed and the Great Panther Silver Summer Silver Giveaway has come to an end. Each market day in June, one lucky winner was chosen to receive a 1-ounce silver bar courtesy of Great Panther Silver and TFNN. We'd like to thank all the listeners that chose to participate, and if you weren't lucky enough to be a winner this time around, be on the lookout in the coming months for another opportunity to win a 1-ounce silver bar courtesy of Great Panther Silver and TFNN. Thanks so much and good trading.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, folks, we're wrapping it up, and we want to finish with the gold and silver market. And we've really made a pretty significant bottom, down at that 1522 level in gold. That was a 61% retracement off of last July's low. That was perfect at 1522 per ounce, and we've tested it 3 times, and now we've made 3 higher bottoms here. And today's bottom, matched the bottom that we made on Friday. That was an exactly 61% retracement, coming off the low that we made back on June 29th. So as long as that area of around 1570 holds, it looks like we have a pretty good, pretty good shot to see the market, move higher. All we need in gold, folks, to move higher, I believe, is a close above 1630. If we can get above 1630 an ounce, this has got a real chance. And the reason why I say that is after we made that bottom in May at that 15.22 level. We've actually, held up relatively well, and we haven't gone down, we haven't gone up, but we've made higher bottoms, and that's important. We got a call from our friend in Singapore. William, are you there?
I am. In fact, actually, I was trying to ask you regarding gold, and you have answered it.
Well, see, we must be on the same wavelength, my friend. What can I help you with?
That was actually the main question I was thinking of asking you, but since you answered, that questions, maybe would you like to take a look at the silver and
sure.
Maybe give me a view on that?
Well, silver has a good pattern, but it's not nearly as good as the gold pattern. And I'm going to put it into Tiger TV so we can all take a look at it. But instead of having higher bottoms, like we've had in the gold market, silver's had lower bottoms from May. It took those out. Now, the interesting part about silver is today's low. We made a little bit lower low than we did on Friday by just a penny or two, and then we reversed. I know it's only 40 cents, which isn't much in silver, but that low was an exact 61%. Retracement. So all silver has to do now, to turn the tide around a little bit, is to move about $1 an ounce. If it can get above $28.40 per ounce, William, it's got a chance of also moving. But gold is by far the better one to be in as far as trading or investing in, because there's more people. There's 5 times as many people investing, in the gold futures and the gold stocks and all the other things than they are in silver. So even though silver is interesting to look at, gold is by far the best one to trade, in my opinion.
Sure. I think gold has attempted to test the low quite a few times, and if it fails to test again, could we say that we are quite safe to actually go on long on gold?
Well, your question is, going long gold here is you have a good place to put your stop. You can put a $15 stop on gold, because if it goes below, 15, I would say 15.60, you're probably going to be wrong. So here's a contract that's worth $150,000, William, and you can trade it for, roughly $1,200 to $1,500 risk. That's a pretty good relationship, because you're only risking 1% of the value of the contract. There are very few things that they let you do that.
Right. Okay.
Well, it's at the moment of truth. There's no question about it. It held the level that it's supposed to, and it's a very low risk at this level. If you had to put a gun to my head, I would certainly be accustomed to be going long gold as opposed to being short.
Okay. Thank you very much.
All right. Thanks for calling in, and have some durian today, okay?
Yes, thank you.
Okay, my friend. Thank you very much.
Bye.
Okay.
Bye-bye.
All right, folks. We're ending up the show here. If you bought the TBT, it's still hanging in there. Remember to put about a 20-cent stop on it. And we'll see you folks on Wednesday, and may God bless.